Hello and welcome to BQ Prime. You're watching IPO Adda, and my guest today is from Yatharth Hospitals and Trauma Care Services Limited. The company is coming out with an IPO which opens on July 26th and closes on July 28th. Price between 285 to 300. It's a fresh issue of 490 odd crores and OFS of 196 crores, giving the total size of roughly 686.6. The public will be holding roughly 33.7% after the IPO is closed, and the promoters are offloading nearly 65.5 lakh shares in the IPO. And joining me is Yatharth Tyagi, who is the whole-time director at the company. Yatharth, thank you very much for joining us on BQ Prime. You're raising roughly 86 crores or 600 odd crores in a fresh issue, which includes a pre-IPO placement of 120 odd crores as well. What is the proceeds going to be used for?
So, we are looking to repay the existing debt that we have out of the proceeds. So 245 crores is exactly the existing bank debt that we have. So we'll be completely repaying that. The rest of the amount we will be using for the capex for the equipment. So, around 135 crores will be going to the capex of buying medical equipments that we will be putting in our existing facilities. And, remaining that around 65 crores will be the unidentified acquisitions that we will be using, and the rest would be used for general corporate expense.
You're primarily based out of National Capital Region, and that's a very competitive marketplace as far as healthcare services is concerned. How do you see your growth in that region?
So I think Delhi NCR market, I think it's a huge market for healthcare, and especially, in totality, it looks like one big market. But if you look at the micro market, that is the cities that, we are based out of, like Noida, Noida Extension. These are the, cities that are ever growing year on year by population. We have the Asia's largest international airport, the Jewar Airport, also coming up in Great Noida very, very soon. So, there's a lot of growth that is bound to happen here, both in terms of population, both in terms of healthcare. So we strongly feel that there is still a lot of scope and room to grow in these markets. And that's where, our existing facilities are, doing it over the last few years.
If I look at your metrics, your bed utilization rates or bed occupancy has been in the range of 45 to 46%, which is much lower than some of your peers in the NCR region. Any reason why it is that so?
So I think we have 4 hospitals, and it would be rightly so. If I can just quickly break up the bed occupancy, that will give you a clear idea of where we are. So as far as our Noida hospital is concerned, there's a 250-bedded hospital, the hospital that we started in 2013. So, one of our most mature hospitals. This is the hospital where we have bed occupancy of around 87%, which is quite higher than the industry average. As far as our other hospitals concerned, that is the 400-bed hospital in Greater Noida. That hospital started in 2018, basically because it revamped from a 100-bedded hospital earlier. In 2018, we revamped it to a 400-bed hospital. There, the occupancy, is around above 60%. So again, quite good there. As far as the other 2 hospitals are concerned, the Noida Extension Hospital, this is the hospital we started in 2019. So technically, the occupancy is around 31% here. So, there are 2 reasons for that. One, obviously, because it started in 2019. So, it's technically a new hospital. And second reason is because, the first 2 years after this hospital started, for long months of the year, it was a full COVID hospital. So this was one of the biggest private COVID hospitals in the region. So, if you look at it, post-COVID is where complete overall non-COVID operations in this hospital started. So that's, in fact, I would say that it's showing very good sharp increase since post-COVID, and has already reached 31%. As far as a 4th hospital is concerned, that is the Jhansi Orchha Hospital, that is outside the Delhi NCR market. It's located in Madhya Pradesh. This is the hospital we just acquired, last year. And last year was its first year of operation. And that's why it has an occupancy of, around 8% there. So overall, that's the right way to look at the occupancy, and we feel just how a Noida and Great Noida Hospital are doing well in terms of occupancy is concerned. Soon, a Noida Extension and Jhansi, the new hospitals, will be ramping up their bed occupancy.
Give me a sense of how you've been able to mitigate the fall in COVID revenues with non-COVID revenues, because during FY 21-22 you had 33% and between 25 to 30% of your revenues coming from COVID operations. Have you been able to mitigate that and grow also in non-COVID areas?
Yeah, so financial year 23, that was completely non-COVID. Roughly around 520 crores top line that we did, it was all non-COVID. So the reason why we are able to not even mitigate but also grow post-COVID is concerned is because two reasons. As I said, we had two new hospitals that started in 2018 and 19. So post-COVID is where these hospitals really started to show their true flavors and started to grow in terms of both bed occupancy is concerned. As far as other reason for a growth post COVID has been, there are a lot of treatments that we have recently started that we were not offering pre COVID. So for example, and these are high end ticket size treatments like kidney transplant, bone marrow transplant, oncology. We have recently put a lot of emphasis on. So because there were a lot of treatment specialties, high end super specialties, we're moving towards a tertiary care hospital chain now, is what we started, and that's why the growth are coming from. And going forward, we will be growing in the same lines.
How do you see the tertiary care or the specialty segment growing from here? Because your medicine revenues is around 40-45%, and you have a lot of other specialties. Is there specific specialties that you're going to target going forward and increase your revenues from?
So, right now, all of four hospitals are standalone super specialty hospitals. For example, all four hospitals are doing good revenue in cardiology. They all, have cath labs. So we have maintained those lines. But going forward, in one of our hospital, that is a Nord Extension Hospital, which is the biggest hospital of the group, there we are putting up, oncology machines like radiation oncology, PET scan, nuclear medicine. We're going to start soon. So this hospital is where we will be focusing on the super specialty and tertiary care of oncology. And actually, we feel the other hospitals which are located in Delhi NCR market for this hospital would be also be acting as feeders for as far as the radiation oncology is concerned. So also, because Great Nord is coming up with the largest international airport of Asia, so we feel we will be focusing on medical tourism, and a lot of international patients are bound to come in our cities. So we should be moving on these lines and helping our tertiary care sector to grow.
So by the time the airport comes up, it will be a couple of more years. What is the current revenue mix between medical tourism and the domestic patients?
So traditionally, we have been not high on medical tourism because you have to see pre-COVID. Around before 2018, we were sort of we had two hospitals, the 250-bedded Noida Hospital and only 100-bedded Great Nord Hospital. So our real story and the growth, picked up when we started when we revamped the Great Nord Hospital to 400 bed and started the Nord Extension of 450 beds. So the treatments that is required in international patients, we recently started those. So going forward is where we are expecting the revenue to drive in there, and that's what the focus is. In fact, our Great Noida Hospital, we have recently acquired the adjacent land parcel there, and we will be, expanding the capacity brownfield there. And the new capacity, we are planning, maybe on the lines of international patients and creating those internal facilities, specifically in that hospital.
If I look at your metrics with respect to average revenue which is coming in, uh, it, uh, it is basically much lower than your peers like a Max or an Apollo or for that matter Fortis. If I look at average revenue per occupied bed, which is around 26,500 odd rupees, and if I compare that to your competitor, it would be your competitor would be 2 times or 3 times that. So how do you see that rate going up from here, and is there a scope to increase your average revenue per occupied bed?
So, our average revenue per occupied bed has been traditionally lower compared to, these peers you talked about, because, we have, that's specifically for two reasons. First is, when we started our chain, we intentionally kept our pricing low. So our pricing is, roughly around 15 to 20% in that range, lesser than the likes of the hospitals that you talked about. And as far as, the ARPA was lesser because of the high-end treatments that we recently started, we were not doing it pre-COVID, like the transplants and the oncology, which is going to start, I mentioned. As soon as these starts, that's where the really flavor of ARPOP comes in. And I also mentioned international patients, which are usually higher ARPOP. So going forward, this is the growth that in ARPOP is bound to happen in our group. And if you look at even the last 3 years, our ARPOP's growth has been significant as soon as we started switching to high-end super specialties. So that's what the growth in the ARPOP should look like.
Give me a sense of how the margins are going to be, because your margins are at 25.7%, but it has declined over the last year. Is there a reason why it has declined? And will that can you push your margin closer to 30%, given that you will be able to pay off your debt and leverage your capacity?
So I think I wouldn't say there's been a strong dip. There's been just few percentage dip in the margin, EBITDA margin. That has been during COVID. The margins were high, even though the overall volumes were not much. But the margins for us in COVID was higher because we were one of the largest COVID players, private COVID players in the region. We did some good work during COVID in North India. So post COVID, yes, the margins were less, but even right now we are operating at really good margins compared to our peers. Going forward, we in fact, yes, you're right, the margins should grow because not just the bank debt going down, but also the fact that the growth is expected from our organic facilities. As I mentioned, a Noida Extension Hospital, that is in the tune of around 30% occupancy. So there's a lot of growth that is going to happen in occupancy there. In Jhansi Orcha, we are operating at 8% in these two hospitals, in Jhansi Orcha Hospital. So when there's growth in your organic and existing facilities, as most of the doctors already kept their infrastructure is already there, so margins are bound to increase in the year's time.
In your opinion, how much time does it take for a hospital to become operating or to be profit at the operating level?
So for us, we do it in the second year of operation, and that is a very strategic approach we have taken because what we do in the first year, we do a sort of a soft launch. We don't do a heavy expenses the first year because if you look at it, the first year, most of the time for hospital goes into empanelment of health insurances, government schemes, and getting your NABHS accreditations. So once those come is when you see patients across the revenue segment coming in. So because the second year is when you get all these empanelments, and second year usually is when our hospitals turn operationally EBITDA positive.
So the Ram Raja hospital, which is a subsidiary, which is the Jhansi Orcha hospital, right? You expect that to be profitable in FY24, given that last year it was loss making?
I think yes, it should be on the lines of that, but I cannot say a definitive yes on that. But we are trying.
I'm just saying it on the basis of what you said, second year of operation. So, and you started Ram Raja last year, so technically FY24 should be the profitable one for it, right?
So that has been experienced in the past for all our existing 3 hospitals. For our new acquisition, that is Jhansi Orcha, we will try to do that in the year.
So you are currently in the NCR region, and with Jhansi as the only hospital which is outside the NCR region. What is the kind of expansion plan that you have? Because you are raising some amount of 65 crores odd for expansion plan as well, right?
Yeah, so we are looking in the territories of Delhi NCR. As I said, I'm very bullish about the Delhi NCR market because areas of Noida, Greater Noida, Faridabad, Ghaziabad, these are ever expanding areas. A lot of urban populations moving there, a lot of urbanization happening from rural parts of UP into these regions. So we are looking for options there, and let's see. I think. If we get this opportunity, we will be looking to acquire it.
So you're not going to get into other northern areas, like means UP, you have Rajasthan, you have Punjab, Haryana belt, which is also there, which many hospitals in the northern region cater to.
So UP we are already operating in. So
that's a Noida and the Greater Noida, but that's part of the NCR region. I'm talking of UP.
Yeah. If there are good options available, which are fitting the size that we're looking for, and if we are able to deliver the same margins that we have in Delhi NCR, then yes, definitely we will be looking at those options.
Mm-hmm. Give me a sense of how do you see because you are operating in the NCR region, what is the kind of growth rate that you're seeing? Because it has almost every major hospital group operating out of that region. It is very hyper competitive, and there is a brand also there, because you have brand association also there when patients go for that. You're targeting more of a Noida, Greater Noida, and Noida extension, and and the new one being the Jhansi one. Are you looking at tier 2 or tier 3 in any way to enter this market?
Yes, I think we are open for it. If, as I earlier mentioned, that if there's good opportunities, because even though we are located in Delhi NCR, we have a lot of catchment coming from UP. We have a lot of patients who travel far regions of UP, especially what happened during COVID with us. We were one of the largest COVID player, in UP. So a lot of patients pan UP came to us, and post COVID, these patients sort of attached to a brand in terms of the good experiences they have during the COVID. So brand sees really spread across UP, and yes, there is demands we hear for patients to come to those cities. We will be looking in that.
Mm. Just a final question. You're going to pay off your borrowings of your company and the subsidiaries. Once the borrowings are paid off, will you be debt free completely?
Yes, that's the plan.
So the entire finance cost, which is currently there in your P&L, will come flow down directly to your bottom line.
Yes.
Yes, Yatharth, thank you very much for joining us today on BQ Prime. The IPO opens on July 26th. The price between 285 to 300 rupees. The company is raising fresh issue of 490 crores and OFS of 196.6 crores. Thank you very much for joining.